Very good evening, friends. I'm Nanakshi Swami, welcoming to my channel Smart Index Edge. Today, I'm going to discuss the three pillars every trader must master. Yes, friends, all of you should master this. We look at the Nifty underlying or the Sensex, we trade on the options. Most of the traders are option buyers. Only few with little bit more money, say for example 15 lakhs, 20 lakhs, they enter into option selling. Even those people are also trapped. Friends, there is a saying, there is no kindness in business, and there is no business in kindness. You cannot make business in kindness, and there is no kindness in business. The market is like that. There is no kindness. You will be butchered if you do not master the three pillars of option trading. The market does not reward hope, emotions, or your opinions. It rewards preparation, discipline, and understanding. Of course, all of you nowadays, they prepare themselves and they come into the market, and many traders, they use my indicators, they come there, and still they feel leftover. Leftover because the complete internal structure, they do not understand. They start seeing the chart, they start applying the indicators, and the internal mechanism, they are not able to understand this. What happens in the market is, today I want to share the three pillars of option trading. If any one pillar is weak, your trading results will collapse like a building with a weak foundation. Pillar one is price action. Many people, they don't study the price action. What is price action? They do not know. Price action, actually, for that sake only, I built the Nalini Lorentz system. And yesterday, I built Nalini Grid for making the traders to be easy to locate the reversal and price behavior, because they don't study it. They think price action is M pattern, W pattern, and so many patterns they study. Price action is not a pattern. You must understand that. Price action is understanding the trader's behavior. Yes, friends. You need to understand the trader behavior. Then only you can understand the price action, not the patterns. What is the price action? You have to question. When you are trading, actually, is a market is a trap thing. See, here in this picture, I've depicted the expiry starts with building a wall. Here, left castle means that is a place where put writer's camp is there. Right castle is call writer's camp. That's what you see. The open interest pillars you see on the OI chart, graph chart, what you see, where it is standing like that. So it's like a wall, put wall and call wall. They form the walls. The institutions, what they do, they initiate the sell. Initiate the sell or initiate the buy from the put wall or the call wall. What happens is on weekly, either the movement starts from the put wall or from the call wall. What happened is last week, it started from the call wall. The market started, Nifty started moving higher. It reached the target of 24,530. There came all of a sudden the big money entered into it and they plummeted the market down. No chance for them. No chance for anybody. It was a sudden fall, sudden huge fall. Yeah, nobody would have imagined such a huge candle. The market collapsed to single day. It collapsed when 24,530 non-stop. It came down to 23,805. 805. Sudden collapse. You might not have imagined. So many people who are smart enough entered into the put option. So there the wall came. In between they stopped. In between they have stopped and they created small walls. Why do they create? They created small walls to attract new writers. New writers. So you have seen the price coming down, collapsing, and what you do? You go for, let me go to this chart and show it to you. Here, let us see here. From here, it collapsed. It stopped over here. So you know that it has fallen below this territory. New call writers have entered into the market. They are happy. Definitely they are happy, and finally, and put buyers are also happy. They put buyers and call writers, everybody are happy. The market came down. Nobody would have imagined this is a huge candle, huge red candle. Let me make it a red candle. This is the wall. This is the call wall and this is the put wall. Right? In between, these are the new CE writers over here. New CE writers over here. Okay. What happened to the call? Call plummeted to almost zero. It came down to 40 or 30 rupees. But the expiry is not over. Single within 2 days, it has plummeted. You might have seen the call option coming to almost 24,000 call option or 24,100 call option. It came down to 37, 28 rupees like that. The same call option, it is running around 28 to 110, 102 like that. I can show it to you. So all the money put has increased in uh, put option premium increased like anything, right? And they created these two walls. Two walls have been created. It was a sudden fall. Only few people might have enjoyed this benefit. Others might have got trapped. Some people, what they do when it falls and this pullback, they start try to enter into this call option, thinking that reversal, and they get chopped. And new CE writers are still enjoying the benefit. These are the CE writers. In between, they are sitting happy, but they are scared now. Definitely they are scared now. The market, after this huge fall, it should have collapsed beneath this. Instead of that, it started coming up. How many points it has recovered? 23,800 to 24,206, almost 428 points. The move is, see, from here to here, if I measure, this is 800 points, almost near 800 points, 50% it has recovered. Even in this process, see, we try to enter into the call option and the put option. Even though there was an up move, market was moving up 400 points. See the premium. They have not at all expanded. This is the premium. If I place the cursor on this, it is 24,100 call option and 24,200 call option. Premium is not expanding. But what the mistake what we are doing is we see for what what these people are doing is big money. Even though it appears the price is moving, internally the premium compression is coming there. We ignore that. We just concentrate only on the Nifty chart. We start marking the levels on the Nifty. Okay, it is 24,296. And above this, there is liquidity. And we write it, we do it, but we ignore what is happening. We cannot see on the underlying chart the compression, what is happening. So we see for the compression on the underlying chart, we think that it is the compression what it is going through. But it is not so. What I observed through my keen observation, what I came to know by applying, comparing the charts, both the charts, call option and the put option. That is what I'm going to show you. Let me take out this picture. Let me take out this picture and remove the drawings. And this is my indicator, a dual instrument indicator I've created, or otherwise you need not create. You can compare symbol. You can apply the call option. You can compare with the same put option. Okay, now I'm going to see 24th, whether it has been fed like that. Let me see whether 24,100 call option I'm going to feed, and same way I'm going to feed 24,100 put option. Okay, I've fed the two options. Let me hide this one because I've added that. If I hide, I'll get only two charts. Let me zoom it. Now you can see the call option. This is the call option and the put option. Both charts I've applied. Don't bother which one is call option, which one is put option. When I apply this, these are the things which I get to notice. See, if I go back on July 1st and 2nd, July 1st is the compression. Same pattern, compression, okay? Compression means both the premiums losing their value, coming together, and if you put a line to this, both the premiums were at the balance. 221, maybe. It may not be, scaling may not be correct, and I may not be putting exactly there. Yeah, it is showing 220. Price line is 225. The next day you can see the same pattern. The put option, this is which one I am not able to make out, whether it is call option or now this is the call option only. The call option has moved higher, right? when the market moved. This is the call option. So on that day, you can see still there was a compression. The price didn't move at all. Again, the convergence of these pivots. The pivot of the call option and the put option, I have coded for that for my reference. And then, can you see the expansion over here? This is the thing. This is the compression what you need to see. This is not visible on the underlying chart. This is what all the traders, they make mistake. See, you have to see for that, then only if you start seeing the compression on the premium chart, then it becomes same pattern. Call option has moved higher. Put option is also direction in the same way, right? In between, there was put option premium blast because the price, the next day it came down, it lost its balance. Call option lost its balance and the price premium put option reached to this level. And the call option came down almost to this level, 70 rupees. I can say it is 70 rupees. Let me put a price note for that. Okay, let me take this one, anchor this 70 rupees. Okay, the put option also came down to, when it came down, when the price moved here, it went up to 27 rupees. Notice, friends, it is Tuesday. Tuesday, the premium call option exploded, but it was with difficulty. Expansion was with difficulty here on this day. The put option, you can notice the price here, compression of the candles on the put option. This is the compression, what was happening. Here also, the same type of compression is happening here when compared to the call price premiums. Call is expanding. So, same thing. We are on the Friday. This happened on Thursday. Friday, the market closed higher. In this way, Friday, it has not closed anywhere. It has closed in between. If you go to the chart, 24,206, it is below this call writer's range. It has closed and it went up to 24,230 and closed near the up. If we closely observe the price action, you need to observe the price action. Here, what did they trap? Yes, they have trapped all these buyers. The price started moving higher, this candle, and trapped all the people, trapped all these writers, and it has closed here. My grid support is telling at 24,128. Within 2 days of theta decay will come into play for the option premiums. Without knowing, some people, they take the position and enter into it. Here, you can see they have changed it. Wednesday, Thursday, Friday, week was alive. Gap up, and they came down. Here you can see they trapped these option buyers who have gone down. They came down. They trap these people. Buyers have been trapped. And then the market closed near the low. Next day it was a up move. See, red candle, the candle was a red, closing was a red. Then what you can anticipate, you could have anticipated the down move in the market. Instead of that, these were these tra- these are all call writers. They were trapped here. Call writers were trapped when the market went high up, and here these put writers were trapped here. These are all the fresh, when it gaps up, it need not come and take the liquidity over here. They reserve the liquidity sweep on future days. That's what happened over here. Market came down and took the liquidity here. Now, see the premium. If you see the premium of the call option was 445, and the premium on that day of the put option was 40, and now after all the drama, what is this day? This is Wednesday, and Thursday, all the premium, this put premium which increased to 324. Let me mark this. Let us see what has happened to that. From 27 to 370 plummeted back, and the call option premium from 70 tried to move here, balanced here. It was here only 70 rupees. But the put premium came down, reduced, and closed while closing, it closed around this level. 100 and let me put this. 199. 199, same straddle, the premium which was plummeted to 27, pumped to 370, and this premium, call option premium, which was pumped to 447, plummeted to 70 rupees. In this week, both of them, they balanced at this price, 139. This is the balanced price. They balanced at this price, and the put option has lost its premium. It is back to the pavilion. It is coming to the pavilion. Let me apply the magnet and let us put the 47 rupees. And the call option premium has from 70, it has doubled to 187, finally closed around 167. That's what the reading is saying. 167. Now, it is the important question is, all this drama, after all this expansion drama, contraction, expansion, and the put premium gaining to this level, opposite side, and the call option coming to 70 rupees, near to the almost 20, it did not come to 27 rupees. It has come to 70 rupees, and now it is trading around 164 rupees. This is all the straddle game. Whoever sold the straddle pace, they must be cashing in on money, writer's money. So in this game, where we have to, as an option buyer, what we need to do? What we need to do? See, if you start observing only the underlying chart, marking everything, compression, noticing compression and everything, you can also apply Bollinger Band squeeze or anything. That will not make you strong. This is the foundation. This is the pillar. This is the price action what you need to see, and the premium behavior what you need to see. Every option seller, whether he is a latest option seller or an option buyer, they should concentrate on the comparison of the option premiums rather than this. So same pattern repeating over here. One, but the days have changed. Wednesday, Thursday. Here it is from Thursday to Friday. We need to see the market, which side it is going to see. Now, at present, the market, if it wants to, the direction at present on the underlying is the direction is towards the temporarily is towards the upside. Okay. Our anticipation is to this level because new CE writers are sitting over there. These are all retailers, poor retailers thinking that market will not come to this. They will get trapped, and there is also a gap beneath this. Beneath this, you can see over here, and it is a liquidity area. Gap is also a liquidity. Unfilled gap, imbalance, plus new CE writers. What is there flowing here? Money is flowing here, and the big money will get liquidity over here. When they get liquidity, they will not go over here to this level. They have taken the liquidity on the previous month's liquidity, May month liquidity, because May month closing high was 24,483. They went beyond the 24,583 to make as if create an illusion that they went beyond that 24,530. They have trapped the liquidity from there. The monthly writers, long-term players, writers' money, they have plummeted there. They have taken this. But those people called writers are not going to lose anything because it is a time-wise decay. Time-wise decay. So now their target will be new CE writers. So what we can anticipate for the coming week, whether Monday or Tuesday, what they have to do, they have to trap. This is the 24,425 is the boundary. These are the new PE writers. And there are new PE writers. Because when the market started moving higher, probably new PE writers might not have come because it has closed near the low. So here are the new PE writers, and there is also a gap in this area. Gap. They may come down and sweep this if they sweep this liquidity on Monday. If they come down to 24,005, then what can happen to this call option? It can 24,200 to 24,100, then 100 points will reflect. This becomes the out of the money call option 24,100, which is 0.4, 0.5 delta. No, it is in the money 24,100. It becomes out of the money. This call option becomes out of the money. Then premium loss you are going to expect almost because of the volatility or theta decay combined, it is going to lose minimum for 100 points of loss, it may lose 60 to 70 points premium. If it loses 60 points premium, it may come down to 100. This is the pivot area, pivot level. We can, from this indicator, I am getting This is the pivot of this, sorry. Let me remove this. This is the pivot. Pivot of this one. Here it is picking up somewhere else because of the magnet. Let me take out the magnet here. And here 104, and this grid is bullish. Above this is the bull zone, and it has turned into bullish, but still it will be bullish from the previous day. That level comes to 83. Sometimes it may go penetrate like this, and same 47, the put option, 24,100 put option, it will enjoy. It becomes in the money. 24,100. Now it is sitting over here. It will regain 100 points, means it will travel to, say for example, it may not go to that. If it happens 47 to 56 or this one, it can come to 120. Then these premiums again, they may converge, crisscross, premiums will converge, and if the direction is towards the upside, you are getting a cheap premium for the 102, and then if the market travels to 24, targets these people, new CE writers, then it can travel to 24,370 to 90, this same 100 option premium. So if the market gains 100 and 300 points, minimum 150 points, it may climb to 250. Hero zero opportunity, you may get this in this option premium. But all this will materialize not by seeing the compression on this chart. That is the mistake what most of the traders do. See, start observing the market. This is the behavior which is happening on and on. It is repeated, but the days have changed, and same pattern which is done over here, you can see there. This is the thing, what is happening over there, you can anticipate. So wait patiently, observe this. This is the preparation you need to, not the patterns. Price behavior. Where are the sellers? Where are the call writers are sitting? Where are the put writers sitting? And those people are the target people for the big money, smart money. So now you understood. If I go to, you start labeling. Where are they? What has happened? Market came down, pushed up, then new CE writers have entered into the market, keeping the stop loss over here, and the price has come down, the price moved up, okay, and price came down. When it came down and closed here, new CE writers, these CE writers have been trapped. Their liquidity have been taken by market gapping up. Instead of moving down, it has gapped up. Same behavior. Instead of moving down, it has pulled back and gapped up, eating this premium of these writers. Okay, when they have eaten these writers and they have gone, they are profitable. Only if they come down, because whatever you do, if you want to buy these shares, stop losses, they have to spend more money. Big money they will come down if they sweep this liquidity intentionally. These boxes are halts. I can say halts are created to engage CE writers and PE writers temporarily. The writers will get trapped, or not only writers, buyers will get trapped. See, both type of pooling money will be there, above and below, and it is a what? Opportunity for these ghosts. They are all ghosts. Volume is not seen. That's why price is not at all expanding. You can see over there compression, compression. But if you go to the chart, you can clearly see the compression on the put side, and this compression may go up, go up, and these may come down to go in an opposite direction. So wait for this. Apply from now onwards, apply the comparison chart of the call option and the put option, just option, and also observe for the synthetic future. If you start observing the synthetic future, if you notice call dominance, then you enter into the market. That will be a huge gamma blast you can experience in the market. The gamma blast can be experienced. You can ask me the question here. There was no convergence over here. Why the PE blast taken place? Because the premium became too cheap. They cannot go expire worthless. They cannot look. It has had the time value. Time value for this put option, because we were 7th July. This is the option premium of the contract of the 14th July. They cannot go worthless because the walls have been created between this. We have selected this, right? That's why it will not go worthless. This is how you need to understand where the compression is happening. You need to see for the compression on the premium chart rather than the underlying chart. Underlying chart, you need to see what is happening over here, direction of the market. See, price is not expanding here. Even though price is moving higher, premium is compressing. Premium compression is taking place. It is preparing itself for the blast. It may be on Monday, it may be on expiry day. Wait for the opportunity. You are a buyer, you option buyer will get benefited by this. And option seller, wait for the traps. Wait for the traps and wait for the divergence. Then you sell it. When you see the divergence, then you sell it. Here you could have sold the put option here on the divergence. If you would have sold the put option, you could have made money here. That is how you need to play. You have to use your tactics. You have to apply your mind. And I hope many people, they do not come and discuss this observation. They do not come and discuss this observation. They tell, you might have seen by chance, some people applying the comparison call option and put option, but they do not explain what is happening. This is the process. Compression, expansion, wait for the direction. After the compression, trap and the direction will be created in the market. Wait for that, go along with the big money. So for that, my Nalini Lorentz synthetic future will help you automatically. It will calculate the synthetic future and it will show you on the table call dominance, short covering. Like if you go to the Nifty open interest chart and you can see there. But along with the price action, with the indicator, you get to know on the chart itself, on the spot itself, because algos are trading. As an option buyer, if you enter little bit by mistake, you are not going to trade properly. That is where it comes, the psychology of the people. Psychology dominates. When the psychology dominates, it destroys. So, you from now onwards, do not let psychology to dominate. You dominate the psychology. How? By preparing yourself beforehand, not thinking that studying the patterns, this is the price action. Behavior of the traders, studying the behavior of the traders, traps, where are the traps sitting over there on the chart, studying on the chart, market, then your success will be yours. Thank you very much, friends. Nalnakshi Swami, signing off. I hope this might have helped you. This may help you to trade better. This is another insight into the option trading. Thank you very much.